Welcome to The Explainer from Talk Tickers. Today, we're diving deep into Dominion Energy's third quarter earnings, and there's a real head-scratcher here. They absolutely crushed their numbers, but the stock, it went the other way. Let's figure out what's going on. Okay, so this is the central mystery we're unpacking. On the surface, everything looked great. I mean, a 14% earnings beat is nothing to sneeze at. But the market, it just wasn't impressed. The stock closed down. So the big question is, what did Wall Street see that maybe the rest of us missed in the headlines? All right, first things first, let's just look at the raw numbers, because honestly, they're pretty impressive. Management laid out a case for some really solid performance. So get this, Dominion posted operating earnings of $1.06 per share. The street was only looking for 93 cents. That's a huge beat, a full 14% better than expected. Just a really clean, solid beat. And it wasn't just a one-trick pony on the earnings line either. The top line, revenue, came in super strong too. We're talking $4.53 billion. That's an 8% surprise to the upside, and maybe more importantly, up 15% from this time last year. That's some serious growth. Okay, and here's the cherry on top. It's not just about looking backward at a great quarter. Management also tightened up their guidance for the full year, and they narrowed it upwards. They're now saying they expect to hit or even beat the midpoint of their target. So you look at all this, and on paper, it's just a fantastic report, right? So if the numbers are so good, what's the story management is telling? Well, it boils down to two key things: execution and de-risking. They basically wanted investors to know, hey, we're on top of it, and we're taking the risk out of our biggest projects. And when they talk about big projects, they're really talking about one thing: the Coastal Virginia Offshore Wind Project, or CVOW, as you'll hear them call it. And let me tell you, this thing is a monster. It's a nearly 3-gigawatt wind farm, one of the biggest out there. It is the central pillar of their whole growth strategy. And they were really hammering home the progress here. They kept saying the project is basically 2/3 complete. The huge foundational monopiles, done. Export cables, in place. They are dead set on that Q1 2026 date for first power, and they wanted everyone to know they are on schedule to hit it. Now, they didn't just share the good news. They were pretty upfront about a snag with their brand new installation vessel, the Cherubics. You even had the CEO saying he was extremely disappointed by some quality control delays. But, and this is a big but, they were adamant that this little hiccup won't throw off the main timeline. They expect it to be working in November, and it won't impact that all-important Q1 2026 deadline. And it wasn't all about the wind farm. They touched on a few other key themes. First, data center demand is just exploding. It's a huge power suck, and Dominion is right there to supply it. They also made sure to mention that their financing for 2025 is already locked in, so that's de-risked. And the overall message was a focus on a strong, conservative balance sheet. So, if you had to boil down management's entire message into one sentence, it's this quote right here from CEO Bob Blue. It's all about 100% execution. The takeaway they wanted you to have was simple: we've got this, we're delivering. Okay, so you've got this confident, we're executing story from management. Makes sense, right? But the market? The market heard a completely different tune. Let's just say it was a chilly reception. And you can see that disconnect perfectly right here in the stock's action that day. While the call was actually happening, the stock was trading in the green, up about 0.5%. But then as the afternoon wore on, it just bled out, closing down almost 1.4%, a total reversal. And get this wasn't just some quiet little drift downward. Trading volume spiked by 65%. Now, whenever you see a big price move on heavy volume like that, it's a pretty clear signal. It tells you the big players, the institutions, are making moves. And in this case, they were selling. They clearly didn't buy the rosy picture management was painting. So yeah, that brings us right back to the million-dollar question. The quarter was great, the guidance was solid, the mega project is supposedly on track, so why on earth did the stock fall? Well, there are a few possibilities here. Maybe the market is more nervous about that vessel delay than management is letting on, or maybe it was just a classic sell the news event. But honestly, the most likely culprit is bigger than just Dominion. It's macro pressure. The entire utility sector is super sensitive to interest rates. And with rates where they are, it's just a tough environment. So even with great company-specific news, the broader sector headwinds might just be too strong to fight against. Okay, so let's put it all together and look forward. What's our take on Dominion from here, and what should you be watching for? All right, there are a few huge milestones coming up that will really test this whole story. First, we've got November. Does that Charybdis vessel actually get to work? That's a huge credibility check for management. Then you have some regulatory filings, but the real main event, that's the Q4 call in early 2026. That's when we get the big update on their multi-year capital plan. And of course, in Q1, we'll see if that first power from CVOW actually happens. So with all that in mind, we're initiating our rating here at Market Perform. Look, the company is executing really well, you can't deny that, but that operational strength is being offset by those sector-wide headwinds and, let's be honest, some lingering project risk until we see these next milestones get crossed. It's a balancing act right now. Okay, so for those of you looking for a more actionable idea, what's a potential trade here? Here's the pitch. You bet on that big capital expenditure update coming on the next earnings call. The thinking is this. Right now, the market is just apathetic. It's ignoring the good stuff because of the macro noise. A really detailed, solid, and robust capital plan could be the specific positive catalyst the stock needs to break out of that funk and get people's attention again. And as always, this is not financial advice.